welcome to the latest episode of Cannabis Unlocked. I'm very excited today to be joined by the CEO of Highway Cannabis, Chris Colón. Chris, how are you today?
Good. How are you doing? Thanks for having me.
Absolutely, man. Thanks for joining. Really excited to have you on the show. We've been working together for quite some time and recently invested in Highway as part of your acquisition of Pleasantries. So super fun to be able to now talk about it in public.
Yeah, first, I just want to say thank you guys so much for working with me over the past year to get these transactions done. You guys have absolutely been fantastic to work with and appreciate all the hard work and trust.
Absolutely. Well, thank you. And we appreciate all the hard work for you getting this deal done, especially given that since we've gotten to know each other, I think it was first like 2021, the cannabis capital markets have pretty much been in this direction, but you've continued hard charging and got the first big deal across the line. And now we got a great pipeline behind it.
Yeah, I think that, operators or companies with a different, one who have been in the industry for a while and have been able to operate through it, and two, have a unique story to tell. If your ability to raise capital right now, I think you have a severe competitive advantage in the market.
Yeah, absolutely. And you're one of the unique founders in cannabis who came into the industry with both experience with retail and with experience in executing private equity transactions and roll-up strategies. So would love
Yeah.
if you would just explain a little bit more of your background and how you decided to take the leap into cannabis.
Yeah, of course. Yeah, I was with the family office based out of Denver, Colorado for almost 12 years. And we were rolling out fast casual concepts. So I loved every minute of it, very entrepreneurial environment. And typically, our motto was going and finding um, concepts that had one or two stores that worked at a unit level, but just couldn't scale, right? Or didn't know how to scale. And so we'd go buy, one or two stores, then go find the next five or six sites, go open up the next five or six sites, test out how the sites worked in different demographics and different trade areas. And then once we had that dialed in, we would then just put it on warp speed and scale the concepts. So the largest concept that we did at that family office was a concept called Smashburger. If you're familiar with Smashburger, better burger concept. And then I started a company called Motive, which was a consolidation of the global endurance industry. So we actually went and bought over 20 to 25 marathons, half marathons, triathlons. And so when I looked at the cannabis industry, and again, this is now, it's funny to say this, but 7 years ago now, a very fragmented industry. Capital was available then, where capital is a constraint now, but a very fragmented industry that didn't have that was right for consolidation. And so if you looked at, I won't say my background, but my experience, rolling out concepts along with consolidating industries, I thought it was perfect for the industry at the time. And so actually got to know a gentleman by the name of Peter Noble here in Colorado pretty well. And he asked me to come on and help him with his concept, Native Roots here in Colorado. And so that's how I initially made the jump into cannabis was I went into Native Roots and helped Peter for, a little under a year.
Mhm.
I then went and was president of a company called Nectar Cannabis, based out of Portland, Oregon. So when I came on, they had six stores. When I left, they had 22. So I would say I cut my teeth in probably at the time two of the more competitive markets, and I'll say probably still are two of the most competitive markets. Um, and then just want to start my own thing. So I left Nectar, and I started Highway almost 6 years ago now. So funded myself for, I don't know, probably about a year to a year and a half. We found a location in Marina Del Rey because I'd done a bunch of work for Nectar looking at the California market. So I found one location that I liked. We purchased it. We moved it across the street from a Costco in Marina Del Rey, and I had my first proof of concept. So I was fortunate enough after that to meet the Gould family, who have honestly been my my saving grace, best investors you could ever have. So shout out to Matt and Steve and them because they without them none of this would ever be possible. And so then we went and opened up two stores in Santa Cruz, and then we've been on a search for more stores since then. So obviously you guys helped us close the Pleasantries deal, and
Mhm.
so that's how we got here. That's how we got here today.
Yeah. So let's talk about it. I mean, Highway now is in California and Michigan, two states that most
Yes.
multi-state operators have run away from. So, what talk about your contrarian thesis and why you want to play in those more competitive
Uh,
markets?
yeah, it is kind of contrarian view. I think a lot of people say you're nuts for going into these states. I think that every state in cannabis has a cycle, right? So, and we've seen it over and over. And having operated in, three or four of the most competitive states, I've seen the same cycle in every state, right? So, first stores that get open, just from a supply demand perspective, do 5, 10, 15 million a store, right? And you don't have to be a good operator to do that. It's just supply demand if you're the first one to market. I'll also say that too on the cultivation and manufacturing side. If you're one of the first cultivators and manufacturers to open the state, from a cash flow perspective, it's great, right? For the first like 3 to 4 years, just from pure supply demand, right? As more and more companies get funded, more and more doors opened, governments see the tax revenue come in, issue more licenses, and just what always is called a limited license. I say that in quotations. Limited license state always turns into a more mature state over the next 5, 6, 7, 8 years. And so with that, what you always see, price compression on both the retail and the wholesale front, and also cultivation perspective. And then obviously you see more and more competition, right? So stores that were doing 10 to 15 million dollars, call it 6, 7 years ago, are doing five, then four, then three, then $2 million at a retail level, right? And so I take the view that if I'm going to go underwrite stores, I'd rather underwrite them after they've been open for 7 or 8 years, and I've seen the downward cycle in revenue. And so I like finding stores that have been around for 7, 8 years that I'm seeing contract 5 to 10%, that I think I can improve from an operational perspective, because I think that a lot of the larger cannabis companies, both private and public, the mistake that they have made is by going into limited license states, overpaying for assets that are doing 10 to 15 million dollars a store. And then when those assets don't perform to what they expect to, if they use leverage to buy them, which most of them did, um, you're in a very precarious place where if you can't, uh, if you can't service the debt, you're ruining shareholder value, right? So I just find that in more mature states, you can buy things much smarter. You can buy them much cheaper. There's more operating history to underwrite, and so I'd rather take that approach than buying something with what, in my view, was overinflated revenue and overinflated values.
Yeah, makes total sense. And you talked about how a lot of MSOs have gotten into trouble because they made these purchases with super expensive debt. And as we just were talking about earlier, we've seen the markets crater both on debt and equity capital markets. And so left a lot of these folks high and dry, unable to rather refinance out these overly burdensome debt stacks. So all that's to say, I'd love to get your perspective on what's it like been in being in the cannabis capital markets relative to your life before that in traditional capital markets.
Jordan, I say this basically every month. I wish that I could, if in my when I was around fast casual concepts, there was just a lot more capital out there looking to be put to work, right? So I joke about this, but I miss the days when, you built a good little 5, 10 store chain company and you could just go hire Lazard or another investment bank and you'd have 8 term sheets within 2 months, right? So it's a lot harder. It's not impossible. And I will say, and this goes to your guys' credit, and also I'll give a shout out to actually my first investor and a person who's been with me since the very beginning is Gopal Garuda.
Mhm.
Um, we've done a very good job of bringing in high quality investors in our cap stack, right? So the good thing with us right now is we have 5 to 10 families or investor pools in our cap stack now, that are very high quality and have supported us since the very beginning. And so if we're looking to raise capital right now, we can go to each of them, and they participate in a small way to get to a big number. And so you got to find those people. But when you do find those people, use the we've used our operational history and also our view on the world, to get them in our cap stack, and it's fantastic to have them in our cap stack now because, as you know, it's very, very hard to find new people to come into the space.
Totally. Yeah, we always talk about the double-edged sword of cannabis capital markets, right? And that on the sell side, like you said, the pockets are few and far between. But then on the buy side, the valuations and terms are just exceptional, unlike you see in any other traditional industry.
Right. I think, yeah, we were just talking about it the other day, Jordan. I think you were on our board call where we've never seen a market before with so many sellers and not enough buyers on the opposite side to even tap into how many sellers there are. I've just never seen a market like that ever. And it's just the uniqueness of banking, federal regulation, and the uniqueness of cannabis that is, and just the lack of capital in the space
Mhm.
um, that's causing it, right? So hopefully there's reform coming. But I think I can speak for both of us. You know, we've been hoping for reform for a long time now, so don't plan on it. So plan around it, but if it happens, it'll be great.
Yeah, totally. So let's talk about M&A. I mean, what are you seeing on the buy side, and what types of opportunities and geographies are getting you excited?
I think that it's a very unique time right now.
Mhm.
I think as everyone there's been published articles that somewhere between $3 and $6 billion of debt in cannabis are coming due right now in the
Wow.
next 12 to 24 months. There's not enough capital out in the market right now, obviously, as we just talked about, to either refinance out the debt or take out the debt. And so we're seeing some unique opportunities just come across very high quality assets that are available right now, just based on creditors trying to get back money on their investment. And then we're also looking to, you know, we're looking at immature markets right now. And so our ideal scenarios that we're going into markets are trying to find 5 to 10 store chains that'll give us a good foothold in the market that we can use to build off of. And so we're seeing a lot of those opportunities, right? I think that taxes, cost of capital, just people being tired from an operational perspective. They've been in it now for 7 or 8 years and haven't had, you know, kind of the returns I think anyone expected for people who stayed in the industry. So it creates a lot of unique buying opportunities right now if you can find the capital.
Yeah. So if listeners are maybe cannabis operators or investors and might have some stores that they'd be interested in selling you, is there a way that they can reach out or?
Yeah, so if anyone has any opportunities that they'd like to discuss, obviously you can email me directly. It's C Colón, so CCOLON at highwaycannabis.com. Always looking for new opportunities. The states we're looking in right now, or since we've acquired Pleasantries, which is 5 stores in Michigan, we're looking to grow our retail footprint in Michigan. For all the reasons that we've discussed, I do like the Colorado market.
Mhm.
So we're actively looking in the Colorado market just because of steadier revenues. And I know a lot of the operators here already.
Mhm.
And then we're just being opportunistic in California. I think California has been, and I can just speak for running, you know, 3 stores there. It's a very unique animal in itself. Each city is a unique animal. And so we're more cautious going as we're expanding in California, but obviously looking for opportunities as well.
Yeah. What do you think about the Oregon market these days?
I was just back in Oregon last week. Um, you know, look, I think that everyone uh, has bad things to say about the Oregon market, and frankly has since we operated or I operated back in like 8 years ago.
Mhm.
But I will give a shout out to Nectar, my former company. Those guys done a fantastic job in Oregon, and when I was there, their revenue was way above the average store in Oregon, and not only their revenue, but they were doing great EBITDA margins in Oregon. And so when I left, they had 22 stores. I believe they have like 50 or 55 now in Oregon. I also think they're in California and Ohio, but they're just proof that with the right operations, the right site selection and discipline, that you can not only survive but really thrive in the mature markets.
Yeah,
And that's the thesis that I've taken, and in selecting the states and the acquisitions I'm looking at.
great. And how do you think about the future of retail in terms of competition from direct to consumer products, or maybe if hemp beverages continue to take off and more intoxicating drinks being sold in other outlets? How do you think that will potentially compete with or complement dispensaries?
So obviously, I think it's going to compete with dispensaries. From my experience, a hemp consumer is different than the consumer that's walking into my doors every day. what I found is that my customers and the consumers walking into our doors are just looking for a different product than what the hemp are providing. I think the hemp, obviously, there's a lot of reasons why people are getting in the hemp space, just less regulation. You can do true branding across, the U.S. instead of being very micro in your branding and having to figure that out. But I think that the two consumers are different. I think that um, more kind of light touch cannabis users are looking at more of the hemp. I think more of your frequent users are looking for more, call it convenience and price point in the dispensary. So I think that look, it's definitely a threat to the industry. Um, but I do think that it's different consumers, and I think that, for the time being, that both can survive. Uh, that both can survive.
Sure. And how do you think about what types of products are you seeing moving off the shelves of your stores these days?
Well, I'll say this. So the big brand I'll give a shout out to is Jeter.
Mm,
So we've always done very, very well with Jeter in our California store, specifically our Marina Del Rey store. So
mm.
shout out to those guys. And I will say that the first time I saw Jeter and the product and just the packaging and the branding, it just looks good. It
They're doing
smokes
great.
good. It
Yeah.
tastes good. And so I wasn't surprised, but Jeter actually, I believe, is the number one brand in Michigan right now too.
Oh, wow.
Um, so again, shout out to those guys. Obviously, you have Wild is another brand too that's kind of a mainstay. If you don't have Wild, you're gonna have problems from a retail perspective. But really, those two, Jeter's the one brand that, both from a product perspective, branding perspective, and just like we've looked at doing stores and stores with them in our California stores. So just great people to work with, great product, and it does really well not only in California but in other markets as well.
Mhm. That's great. Awesome. And then how about in terms of like product categories? Like I think we've noticed a trend that typically when a state opens up, it's about 60% flower sales, 40% vapes, edibles, and everything else. And then you typically see those ratios reverse. Are you seeing similar trends?
Yeah, honestly, it depends on the state. I think that
Uh-huh.
just like you said, I think that just when states first opened up, it's more of supply demand. I think that, obviously flower comes first, so that's gonna be the majority of things on shelf. I will say though, like if you just look at our Michigan stores versus our California stores, from a both a flower and kind of pre-roll perspective are around, call it 38-40% of sales. We're in Michigan, it's a bit larger than that. You're approaching like 50% of sales. So I think it depends on, I think not only it depends on the state, really. But you're right. Right when states do come on, you're mainly seeing flower that'll go 50-60%. But I think that's more of just a product selection in states coming on more than it is
That makes sense.
consumer benefit. You're obviously seeing more and more uh, health advised choices, right? So you're seeing more vapes and edibles rather than, your traditional joints and pre-rolls and flower. Um, yeah, I think it depends on the state and then obviously the consumer.
Yeah, that makes sense. And you talked about general pessimism about transformative regulatory reform. I would love to get your thoughts on what you think it'll require to really get more capital flowing back to the industry in a big way.
Yeah, so that's actually a fantastic question. Look, my view is, and I know probably people don't want to hear this, but my view is I don't think rescheduling is going to do much. I think
Mm,
that there's a lot of other headwinds in cannabis that rescheduling doesn't even begin to address.
mm,
Black market being like the biggest one, especially in California. In California, I think a lot of people have talked about this, but it's about a $9 billion cannabis market with over 4.5 billion being on the illegal market. Um, so I think that, when in the anticipation of Schedule 3, you saw a pop in the indexes and the cannabis indexes and some of the publics, but now you've seen it kind of die down again. And I
mm.
think that if Schedule 3 does push through in the near future, I see you'll see an initial pop on valuations, but I think it'll die down over the next 9 to 12 months for the sole reason being that rescheduling doesn't fix any banking, right?
Mm.
In my opinion, there's going to be no major institutional money or no real liquidity coming into the market without being able to list on the public on the public stock indexes,
Mhm.
or yeah, on the public stocks, and then also to just more institutional investors they're not going to come into space unless there is some major banking reform. I think they're all spooked by the current banking regulation, whether they should be or not. So I think that real valuations and real health of the industry from a capital perspective are going to come upon a banking regulation or changes in banking regulation, not rescheduling, right? I think rescheduling obviously helps from a tax perspective, but I think that a lot of people aren't paying the taxes anyway. So I think
Right.
that if that's not going to be a major change to what's currently happening, the real change will be some change in banking, and then I think you'll start seeing investment in multiples starting to rise, value starting to come back for a lot of the companies when that happens.
Yeah, that makes total sense. Great. Well, Chris, this has been a blast. Thank you so much for joining the show this afternoon.
Yeah, Joy, like I said, I appreciate you, the whole key team. You guys have been absolutely incredible. I can't speak highly enough of you guys. So thanks for sticking with me through all this, and look forward to doing some big things with you guys.
Absolutely, man. Same compliment to you and the rest of the Highway team. You guys have been fantastic to work with. And, we all often joke that we're either the smartest or the dumbest for fighting through the down cycle over the last several years. But
I will say, like I did again, for the operators who have not only survived the past 5 years, but have thrived in it, you can't speak. I can't speak well enough about any of them, and frankly, just because uh, cannabis has been the hardest thing I've ever done in my career. Just because you don't just have, it's not just traditionally rolling stores out with branding. You have all the regulatory stuff. You have very fragmented supply chain, and so there's a bunch of different factors that frankly, when I got in 8 years ago, I had no clue about. But now sitting here, 8 years, whatever it is, 9 years into it, whatever it is now, um, we've all been through it. So I think that
yeah,
it's an advantage for people who got through it.
most definitely. Awesome, man. Well, thanks again.
Yeah, man. Thanks, Jordan. I appreciate it.